Careful, Alma. Careful. Gentle with him. Alma, put him
Yeah.
down. Put him down.
I don't even know anymore.
We got a cat being slowly
Presidential.
strangled to death over here.
What's going on with your cat?
She almost trying to pick him up, and he was slowly being strangulated. So
Yeah.
we'll stop to that.
Yeah.
She's like
There
a
you go,
Lenny
Snowball.
of Mice and Men.
Yeah.
You gotta pet the rabbits.
Yeah.
Welcome to episode 86 of Farm to Markets. This is the show where participants only get 5 minutes to state their opinions, and the person with the most time at the end wins, but there are no prizes. Today we are talking about the new bull market, the SEC suing Coinbase, companies getting involved in politics, the PGA, and Jeff Bezos purchasing 1 share of Amazon stock. The S&P 500 entered a new bull market last week after rising more than 20% from its October high, which makes sense. The bear market, which lasted 248 trading days, was the index's longest since 1948, according to Dow Jones market data. Currently, it's up about 14% in 2023. Below the surface, there are encouraging signs that the rally has legs, even though few investors had much confidence in it until recently. Investor sentiment rose last week to the highest level in a year and a half. Market breadth, or the number of stocks participating in the rally, has finally widened beyond shares of big technology companies. Do you think good times are back, or what do you think is going on?
To an extent, I think yes, they are. I think in large part this is because we're in a kind of a market where I think bad economic news is going to be good for the market. We're seeing CPI come down. Unemployment ticked up a little bit. Labor participation is stagnant. These things are telling the Federal Reserve to stop hiking interest rates and potentially start lowering them again in the near future. Higher interest rates in the economy make it more expensive to borrow money, which makes it more expensive to buy things that you have to borrow money to acquire, like houses or cars or big appliances, stuff like that. That slows the economy down. And on the stock side, when interest rates go higher, that means fixed income assets pay more, so bonds and CDs. So you have a combination of, as interest rates go up, people buy less stuff and they take money out of stocks and put it into bonds and CDs. Well, as interest rates start coming back down, they're going to start buying things again, as well as take money back out of bonds and CDs and put it back into stocks. So I think both of those things, at least in the near term, will be positive for the stock market. Obviously, there could be some big black swan event that, comes out of nowhere and wrecks everything. If we have a more severe recession than the one they're still kind of predicting, then, that could disrupt things too. But if the Fed pauses or even starts lowering rates, I think, the stock market's going to have a pretty good run for 2023.
For me, when I see prognostication or I read a publication about the direction of the stock market, I kind of lose interest. I look at the facts and then I pretty much move on. From January of last year to October, the S&P 500 fell 25%. Since October, it's clawed back 20%. Now, to anyone out there that might be wondering, I'll save you the suspense. The markets are going to drop 20% again, and they're going to claw back 20% again and again and again. We serve our clients by basically just following the rules and sticking to the to our process. If we served our clients by predicting the markets or by picking stocks, then my cavalier attitude towards the market direction would probably get me fired. I would probably make a terrible Jim Cramer, but that's just not the way we operate. We don't predict floods, we build boats. Like I said, we play by the rules. We help keep our clients in between the guardrails during all market conditions. So whether the markets are going up, down, sideways, or in circles, I really don't care. We're still just serving our clients the best we can.
One of my favorite questions to ask new clients is always, do you think this is a good time or a bad time to invest? In terms of bad, gosh, we've got a presidential candidate who's got 37 indictments against him. We've got a president who Congress is doing investigations and finding that he has got all kinds of corruption charges based on conversations and relationships with Ukrainian oligarchs. We've got gay pride parades going on at the White House lawn. Or do you think it's a great time to invest because the hospital down the road has technology where they can do relatively minor incisions for surgeries with robots that used to have a 85% success rate, now has a 99% success rate. Talking to a client today, they're using their Dick Tracy watch, which basically was their Apple Watch, where they can actually do FaceTime on their watch, just like Dick Tracy in the comic strip in the 1960s. There's lots of data and lots of news out there that make somebody take pause about whether now is a good time to invest. On the other hand, with artificial intelligence, the sky's the limit on what that's going to mean for productivity in our economy. There's enough good news or bad news to make a case for either way. I'm saying, just like Drew said, just follow the rules, and we do. I can't say whether this bull market is sticky or not. All I know is that we're just going to do what we're going to do.
I was hoping you'd make a call so I could play it back 6 months later and tell everybody if you're right or wrong. Kind of the point of the question. But
I
no,
answered the question.
What's that?
I at least answered the question.
Yeah. Well, in 6 months I'll play it back, and you can.
Yeah.
We'll just pick you apart.
See how December looks. So.
Yeah, exactly.
Answer it twice, both pro and con, and then you can play whichever one's right.
Right. That's what we'll do, and then we'll market it. Yeah. And then get in a bunch of trouble. No, I mean, technically, yes. Technically, the bull market is back by all technical definitions. I like to see that market breadth is coming back, especially for like the diversified portfolios. So people that were in more value-oriented portfolios are starting to move up as well. The market did not seem to react super well to Jerome Powell's comments today when they said they're going to skip this rate hike, which was highly anticipated. And yes, I did say that a couple of weeks ago. Maybe I'll have to dig that video up. But they said that they could potentially raise interest rates later this year. I think that's they're just keeping the pressure on the market. They want to say, hey, we're going to skip this one, and then we might, raise rates earlier this year. But on all accounts, I mean, inflation appears to be coming down, and I think the Fed just wants to keep their foot on the market, or just keep the pressure on things so they don't loosen up too much and we go back to like an inflationary environment. Right now, inflation seems to be coming down, and the Fed seems to be holding. So that's at least one major headwind that markets were dealing with that might be going away. And I think you're starting to see people's reaction to that. So we'll have to see how markets digest this their comments over the next couple of days. But no, I mean there's certainly some reasons to see the market going up, and I'm certainly happy about it. Let's see here. Okay, so the SEC alleged that Coinbase, the largest crypto exchange in the U.S., violated rules that require it to register as an exchange and be overseen by the federal agency. So the federal agency being the SEC. Coinbase pushed back on Tuesday, accusing the SEC of taking an enforcement-only approach with the crypto industry in the absence of clear rules. Do you think the SEC is being too hard on Coinbase, and do you think cryptocurrencies are securities and should fall under the purview of the SEC?
Well, in general, I think the SEC could probably have given the crypto industry a little bit more notice. Like say, hey, we're going to start regulating you like this, and then see if, the industry kind of regulated itself. I'm not particularly gung-ho for SEC regulation, but from the SEC's standpoint, looking at the crypto industry, it's filled with grifters and fraud. Laws and regulations are nebulous. Congress has largely abdicated its authority on the subject. At least, I guess they're taking a position. If you're a cryptocurrency proponent, at a certain point, you've got to figure out what cryptocurrency is and what it's actually good for. Is it an asset or is it a currency? If you want it to be treated as a currency, then you should probably find a way to stabilize its value and push for mass adoption. If you want to continue treating it like a lottery ticket, pure speculative asset, it's, you shouldn't be surprised when the SEC comes in and, drops the hammer. Again, they could have been a little bit more, light-handed on the industry, but until everybody figures out how they want to treat crypto, I'm not surprised it's going on.
This one's tough because I've said before, I like the fundamental purpose of cryptocurrency as it represents basically an alternative to our own messed up fiat currency system. But I do see way too many problems and a lot of opportunities for abuse by letting this thing just run in total anarchy. Case in point, FTX. Now, I would be singing a slightly different tune if cryptocurrency were treated more like a alternative currency rather than what Alex said as a capital asset, which is basically just buying it to see the appreciation or treating it like a lottery ticket. To find one person who bought cryptocurrency just to buy into this new unregulated world currency, I could probably find 10,000 that buy it and trade it to make a profit. It's just a hot capital asset right now, so it's kind of strayed away from its fundamental beginnings. It almost seems like cryptocurrency and these cryptocurrency exchanges want to be like Chaz in Seattle, where it's just like, hey, let us do whatever we want, no regulation, leave us alone. You're going to have problems. So if you're acting as a brokerage firm or a clearinghouse, then you should be held to at least some of the basic rules.
The problem I have is that it's not like these regulatory agencies have any more virtue than the people actually engaging in these transactions. First and foremost is that Coinbase is getting hammered for like 13 of the 15 digital currencies that they trade. They're not even, more than half of their profits came from Ether and Bitcoin, and yet those two are not being regulated. It's just the other ones. It sounds like they're using selective regulatory authority to mess with these companies on an individual basis. Alex made the point that Congress has largely abdicated their responsibility, and they have. This is the purview of Congress. The White House and the executive branch does not have the authority to just make laws whenever they see problems. That's the role of Congress. If the people's Congress wants to regulate cryptocurrency, then they should, but it's not up to the SEC to do so.
I mean, I understand what they're trying to do. They see an area where there's fraud and abuse, and they want to sweep in and start cracking down on it. But yeah. I mean, before this episode, I was like, okay, it's definitely a security. But then as I started reading in to what securities are, what currency is, what commodities technically are according to IRS code and like all that kind of stuff, I mean, I'm not so sure it really falls under the definition of a security. And technically it's a currency. I mean, maybe it's a commodity, but you're right. I mean, if it's trying to be a currency, then kind of like Alex said, it has to work its way into stabilizing itself and then actually being used. Because right now it's kind of its own entity. And I think the SEC jumped the gun a little bit and it's like, all right, we're going to sue you, we're going to sue you, we're going to sue you. When they should just be like, look, somebody needs to define what cryptocurrency is, and then we'll start regulating it. Because it's kind of surprised. It's like we let all these companies go public, we did nothing about it, and then surprise, now we're going to start suing all these. We're going to say that your multi-million-dollar company is completely illegal. So I think they jumped the gun. I think they're coming down too hard on the crypto exchanges, and they basically let this thing proliferate and then basically said, you guys are bad for doing this. And I think they should have just taken a more conversational approach than an enforcement approach. All right. Okay. So CEOs spent the last few years adjusting to a world in which investors, customers, and employees expect corporate leaders to align themselves with social causes. Today, that has made companies targets in the U.S. Culture war, where one step can turn a social media storm into a corporate crisis that cripples business and wrecks careers. Some CEOs are rethinking how or whether to weigh in on sensitive political or social matters, with trans and other LGBTQ issues particularly in the spotlight. Do you think companies should get involved in politics?
By and large, no. I think if you're a big company that wants to sell to as many Americans as possible, it doesn't make a whole lot of sense to alienate large chunks of your customer base. But this subject was actually the topic that I talked about in the newsletter article this month. So I'll keep it brief and just direct you to the newsletter this month. If you really want to know what's happening, it's not necessarily, I don't believe anyways, that all these big companies believe that it's a great idea to do all these, quote unquote woke things. They want to prop up the value of their company shares. And the reasons are many, but the big ones are, companies own a lot of their own shares, and executives are compensated with company shares. Another big reason is if you want your company's shares in big financial firms, mutual funds, ETFs, pension funds, that kind of deal, you've got to go through the rituals that these big financial firms require you to stay in there. And all these things, diversity, equity, inclusion stuff, LGBTQ promotion and advertising, all that raises your ESG score. Higher ESG scores means more likely to be in those mutual funds, ETFs, pension funds, everything. So you kind of have to do these things if you want to stay in those funds and maintain your share value. So from a company standpoint, I understand why they're doing it from that standpoint. And what that tells me is that they're more concerned about the share price than whether or not you actually go shopping at the store like Target or buy Bud Light.
Mm-hmm. Yeah, there's kind of a lot to dissect there, especially in the investment world. But just how the question is phrased, should is kind of a misleading word because it forces my opinion on a company that can basically do whatever they want, in my opinion. I would rather ask, can companies get involved in politics, or should they have the right to get involved in politics? And my answer to that would be absolutely yes. If they want to get involved in politics, then they should. If they don't want to get in politics, then they shouldn't. But I'm not about to cast my feelings on what every company should or shouldn't do. I believe that's their business. I'll paraphrase Milton Friedman in one of his essays from a few decades ago. And basically he said, business's sole purpose is to turn a profit while respecting the rules of the game. And the rules of the game is basically honoring contracts, not abusing employees, not practicing in deception and fraud, those sorts of things. So if a company thinks it can get political and succeed in its sole purpose, according to Milton Friedman, then more power to them. If they think that their political agenda will result in a failure of their sole purpose, then I think the company's owners or management would be best to channel their political energy elsewhere.
I think from the company's CEO perspective, it's not a question of whether or not they should, it's whether or not they have to. They're getting huge pressures from very, very loud activist groups to do things that they generally don't want to do. And what has happened is they've kind of coalesced to these loud activists for decades because the other side of the idea is pretty much just kind of rolled their eyes and kind of put up with it, and they still shop at the stores. Since the Trump phenomenon, the other side saying, we're going to play just as hardball as the people who are doing all the activism. And what's happened is for the first time in my lifetime, I'm seeing both sides play as aggressively and as dirty as the other side. And what we're seeing is a division in the United States. So the CEOs are kind of being held hostage. They're in a position where they're going, we don't really want to do this, but we kind of feel obligated to do so, particularly with this explosion of diversity, equity, inclusion specialists who are now really getting involved in corporate America.
Yeah, I apologize for the way I wrote the question. I did not mean to lead anybody in any particular direction. I don't think companies should be forced to make a decision. And I do think that now when it's kind of like baseball. It's like I assume that baseball, or like I said in past videos, that baseball should just stay out of politics. And I think it's the same way for companies, because once you go that route and everybody, maybe the first couple of times you do it, everybody agrees with you and they pat you on the back. But eventually you're going to find something that's horribly divisive, or everybody's going to turn on you. And now you have to shift politically. And then it looks like you're just wishy-washy. You're just trying to get people to, you're just trying to make yourself look good. And I think people get caught in that. And so I think if you're a company, like Alex said, trying to make as most money as possible, you just sell your product. And then if you as the owner or employees want to donate your money and support causes on your own personal time, I think people can respect that. But as a company, you're just there to, sell products and make money. And if you want to donate something, donate money to something, do something that's not so divisive as some of these issues that they're talking about. So yeah, I would prefer companies just stay out of it and just stick to selling computers or sporting good clothing or whatever it is. All right. Okay. Wow, running out of time here. All right. So yeah, the PGA Tour and Live Golf, the Saudi-backed upstart that sent the industry into chaos when it teed off last year, have agreed to a stunning merger that ends the divide that has dominated the sport for the last year. And yes, I was like blown out of my bed when I saw this on my phone and when I woke up that morning. But the deal basically weds the Saudi money and the PGA Tour name and a connection after months of bruising litigation and sharply traded accusations. It also consolidates the biggest assets in professional golf at a time when golf bodies, including the tour, are being investigated by the Justice Department for antitrust violations. What did you think when you saw this merger?
Well, the only real thought I had was that the PGA Tour is going to have a lot more difficult issues with the federal government and their antitrust scrutiny. Beyond that, they can do what they want, I guess.
When I first saw this merger, it kind of reminded me of when I worked for the railroad. I worked for the Signal and Communications Department, but we shared an office with the car shop. And the car shop was kind of a motley crew. And they're always playing pranks on each other. And this one time, one of the guys was always invested in lottery tickets. And I guess they somehow fudged the numbers, and they had like his brother-in-law read off the numbers for the winning tickets, and they made it seem like he won. And he just went nuts. He was going around flipping everybody off, telling the boss off, like, oh, I quit, all these things. And then they're like, we were just messing with you. And then he's like, oh, and it was really awkward after that. So this whole like LIV thing is like all these guys that went to the LIV, and now it's like, oh, we have to go play with the PGA again. This is kind of awkward. So I don't know, this whole thing, I like golf, but I really don't follow that world too closely. The way I see it is there's few PGA and Live professionals. There's probably a few hundred PGA Tour players, a few lawyers, and then like millions of fans. I don't really know why the fans care so much. Is the game of golf being fundamentally changed? I just see it more of like money and kind of a power shift. But I think the athletes are going to still be playing golf. It's still going to be fun to watch. So I don't really see the big deal.
First thought that went through my mind when I saw this agreement is that it's just another thing that the fans have to think about besides golf. That it's just a distraction for the individual fan. Be honest, when it comes to golf, I might as well be watching Chinese tree catching for all they care. It's something I don't really think about much, and it's not something that is part of my world. But quite frankly, you take something fun like golf and you make it into some sort of a controversy.
Well, I think it's also because golf is getting backed by the Saudi sovereign fund, which clearly has some human rights issues, and I think people are concerned about that. So, and I think the PGA got a big fat check waved in front of its face, and they're like, okay, we'll take it. All right, last question here is that Jeff Bezos unexpectedly bought a single share of Amazon stock in late May, marking his first known purchase of the company in more than 2 decades. Why do you think he only bought one single share?
Well, some people have pointed out that there's a lot of 420-69 symbolism going on with this purchase. So I have no idea, but I like to think that that's the real answer.
I'm out of time.
I think he did it primarily to give us some talking points for farm to markets.
Yeah.
Yeah, I saw it as a big fat gift to me. I'm out of time, so but yeah. All right, Joe is clearly the winner today. I think you won last week too. I didn't mention it, but I think
you only mentioned that there's no prizes.
Yeah, keep bringing that up. It adds the overhead. All right, well that's it for episode 68. We'll see you again next week.